Greetings, Dr. Jeffrey Scott, and this is my weekend market update for Sunday, April 2nd, 2023. I titled this one, Is It Different This Time? I'm referring to the series of bear market rallies which we've had and whether this one is likely to succeed and lead to higher highs, unlike the prior four or five. It might be. My email address, hgsidoc@gmail.com. If you're new to my channel, click subscribe, hit the alarm. You'll get notified when I post these. And if you have any comments, either respond via email or in the YouTube channel. And please hit the likes. So maybe someday YouTube will actually promote me to someone besides my close friends. So let's go ahead and let's take a look at what I think is going on in the market and some thoughts for next week. As always, this is for educational purposes only. Anything I should say should be considered in the spirit of education and not be taken as investment advice. I am a doctor, not a broker. I am independent. I am not affiliated with any specific software vendor or trading company. I've paid for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I use wealth charts among many other programs. I spend most of my time in the charts on these videos in wealth charts because that seems to be what folks like when I sway off of them. Um, I also, from time to time, get invited to speak at a wealth charts or Wealth 365 event. And we have one coming up, the Wealth 365 Summit, which I think starts on the 17th of April. I'll be speaking on the 22nd at 10 a.m. Please use my link to register if you haven't registered already. No, I don't get paid or any special credit if you do. But I'm blessed that Rob Hoffman, the proprietor, lets me talk, considering I don't have a mailing list or a history of a lot of students that I could bring with. I do this as a unpaid volunteer, although I do have a package that I sell within wealth charts. I also do a daily video. Now, the weekend video I do like clockwork. The daily video depends on travel schedule. This past week, I had a bout with the Norwalk virus that kept me off the airway, but I anticipate over the next few weeks I'll get more active, especially if this market breaks out and my posture becomes increasingly long. Stocksanddocs.com is the site. You can register there and you'll get a link in the morning. I do these sometimes after the market closes, before they open, and they get posted sometime before the market open. I also have a live meeting coming up. I don't do many live programs, down to 2 a year. This one's in Orange County, California, June 9th through 11th, with a meet and greet on the 8th. I will be there live. Online will be David McMullen, Chris White, and Ron Hyatt. It's a low-cost meeting, $400. 20 spots are available, although I think there's only a couple left. And contact Greg at GAM72054 at AOL.com, as you can see there, for more information. Hope to see you live. It's always great to meet people who follow me and like the stuff that I'm doing. So, major markets tell the story. First thing you know, good Friday's performance. What a day. The only thing that was down was gold. No surprise. Gold rises when the dollar's weak, but gold also rises when there's fear. And there was a risk on mentality on Friday and for the week. Notice that in yellow, 3.2 for the week on the Dow, 4.2 on the NYSE, the Q's 3.2, the Russell 3.8, the broader NASDAQ 3.4. That is a major move for the markets. Other things that stood out, silver, which has caught up to gold, was up 4.2, even though gold was down on the week. Biotech moved a bit. It's still not really done much of late. And I only mean of recent because it's way off of its 2022 lows. And then notice the Innovator IBD 50 moved up 3.5%. ARC was up 6.9. So is there a broadening of this rally from the big cap in the QQQs to some small cap growth and across the spectrum of stocks? I think there was, and I think that's a bullish finding. Now, the other thing to point out is technically the Qs and the NASDAQ itself are in a new bull. They're both up over 20% from their October 13th lows. So woohoo, a new bull market. Other thing here is all the sectors were up on the week, and that's nice to see as well. Now, how strong was this market? Well, let's look at some of my Q Edge, my dashboard here. I'll talk about the buckets later, but just notice how there's like nothing lining up over here. And what that's telling me is there are no stocks near the bottom of their Bollinger Bands. If you watch this on a weekly basis, that is a big bullish change in the market. The other thing is all sectors were up on Friday. And if you look at Friday, 100% sectors up, 99% industry groups, 95% stocks. Now, I know people who lost money on the week, but most of them were positioned short. If we look at 5 days, look at the week itself, which is where the arrow's right here, you can see all the sectors were up. In fact, over 2 weeks, all the sectors were up. Over 1 and 2 weeks, 98 and 99% of industry groups were up. And over 2 weeks, 91 and 89% of stocks were up. Now, counterintuitively, that might be bearish, and we might be due at least a pause because we had two massive, massive positive weeks. But then you look at the last column, and you could see over a month, not so fast. Over a month, we're still more down than up across all three sectors, industry groups, and stocks. So major 2-week turnaround. Hopefully the bulls will win. Now rates, I guess they were up a tad, 3.37% on the week. On the 10-year, up 1.23%. On the 30-year, I would say that's pretty steady considering the flip-flopping that we've seen. If you look at this chart, the rates are in white, the S&P is in yellow. You can see the S&P goes up as the rates have come down. So at least for this week, some of the fears about inflation seem to have been quieted. Now, I continue to have concerns, like many market pundits, about potential recession in the near future. And I just point out on the 10-3 inversion, the 10-2 inversion, you don't get the recession in the gray bar until the inversion resolves. So we haven't resolved yet. For the bull case, we are not seeing credit tightness. We actually came down this week on the high index option adjusted spread. Breadth rebound. So let's show you what I mean by rebounding. Notice the stocks above the 200 increased, the stocks above the 400 increased. But look at the move from reversal territory on a bear side to getting too bullish, perhaps on the 13-week new high, new low. Can we go higher this week? Absolutely, we can. Markets that are extended can get more extended, but I would be amiss not to just call out that we're getting extended there. In fact, if you look at the markets and you look here, for example, the yellow stocks above the 50, increasing Dow Jones, the Russell, the NASDAQ 100, the S&P 1500, the S&P 500. These green dots represent breadth thrusts or significant, bullish findings, and you see them across the markets. So a very exciting time here in the market, whether you look at the markets as a whole or you break out into the various components. Now, I mentioned I talked about the buckets in a few minutes. Here's where we were last week. Last week, nearly 30% of the stocks were at the middle of the lower half of the range. And in fact, the majority of the stocks were below the midline, 76%. This week, 76 are above the midline, and there's very few stocks from the 0.3 bucket and lower, and very few to none below. This was a massive shift from a bearish posture to a bullish posture. Is this too much, too fast? I don't think so. Nothing is sitting at a high number, 30, 40% above the Bollinger Bands. We might get there, but we're not there yet. HINDY free zone, NASDAQ and NYSE. No, you don't expect a Hindenburg Omen. The good and the bad. The NYSE, the new lows are down to less than 1%. The new highs are up to 3.2. That's a sign of a healthy, strong market. On the NASDAQ, the good news is the new highs are up to 2.26%, but the new lows are still above 3.2%. So the NASDAQ has, although it's outperforming, you're still seeing some new lows, which I got to believe is a bearish finding. Market stage broad-based rally. This is the Edge Raider warehouse report. Chris White will be speaking at the meeting. It's one of my favorite things I do in Edge Raider besides buckets and the Hindi. And I take the stocks and I use the fundamentals, not from this week, but from last week. And I look at how stocks perform based upon certain fundamentals. ERG is a combination of EPS rank, relative strength rank, and group rank. And you can see this week it's pretty flat. It's a 5% return. Doesn't matter what your ERG was. So not a growth driven, but a broad-based rally. Over here are a number of groups I look at, and I looked at returns from Friday the 24th to Friday the 31st, and notice none of them were red except for, interestingly, the best of Woodward and Brown. I don't. If I look at, for example, um, my holdings that I went into the week with, they were up 5.59. Like I said, about 5% across the market. Some things were up massively. Now, what's interesting is some of the bearish groups actually did well. That's kind of, if you look here, everybody did well. It's hard to find groups that didn't. Now, growth certainly did well. Market Watch 250 was up 4%, IBD 54.5%, and the S&P 500 was no huge laggard at 3.45. It's what you call a broad-based rally in a strong week. Coming up, important things for the week ahead. We've got Fed speakers, Bullard on Monday, Cook on Monday after the close, Mester on Tuesday after the close, Bullard again on Thursday. We've got some PMIs, employment, jobless claims, and employment again on Friday, the monthly employment report. Wednesday's the ADP. So I think we're changing in what we want to see. For the longest time, every time a report came up, you wanted to see it come in soft so that the Fed would see no reason to raise again and to start talking about a pivot or at least a pause and a review of data. I think now we're almost getting to the point where we don't want to beat the numbers, but we don't want to miss by much because we don't want to show that the market's tanking. And I don't mean the market, rather the economy is tanking. We need Goldilocks. We need it just right. We need soft enough so the Fed doesn't have to tighten, but strong enough that we don't go into recession. Goldilocks is a fairy tale, and so are soft landings. You get them, we get hard landings more often. We'll see if we get Goldilocks. Earnings releases, you can see there are some, there's just not many this week. But of course, if one of your stocks has earnings, it's a big deal for you. And it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. A lot of words here. We saw big, and I think it was a short covering rally, frankly, or a short squeeze. Small traders are holding record short future positions, near record longs. We know that the investment advisors are near record bearish, and the pros are sitting on a lot of cash and are underexposed to stocks. If there is a continued belief that the Fed has stopped or has slowed the raising and more money comes into this market, and there were major inflows into funds this past week, I think the short squeeze continues and the markets go much higher. I think there's even a chance that we're having an assault onto higher highs. That said, I do believe in a lot of things, but I'm also realistic and I have to be careful. And I'm not ready to put all my money in, because if I was, I'd be all my money and I'd be heavy margin. I think the markets go higher. I think there's a reason to think they could pause here. I talked about the Fed speakers and the data, but we're also getting a little short term extended. So last week or this past week, I added some positions. I like rolling my options that get a lot of profits up and out, raising the strike price, giving me longer duration. And when I raise the strike price on an option that's already in the money, that means I take some cash out. I expect to see further gains from here, but would it surprise me to see us go sideways or give us a pullback? Not at all. And I think we may be moving back to the buy the dip mentality. Now, I admit that sometimes I worry too much. And if I look at the big picture, here I'm more bullish than I have. And I just want to put this up. All the talk about recessions and all the things that can happen. Um, Take a look at this. When you get a S&P 500 7% gain in the first quarter, there has never been a lower market on the full year. Average return on the full year is 23%, the median 24.7, and the percentage of time the market's higher. So that tells me you got to be careful. Even those like me that are concerned about a recession have got to recognize that there are a lot of things happening now that say, maybe not, maybe this market does go higher. Again, reminding you of the Wealth 365 event. Love to see you there, especially when I'm giving my talk. And that was quick this week. It only took me 16 minutes or so. Now let's go into wealth charts and let's take a look at the markets. By the way, if the audio is not great, I apologize in advance. I'm having a bachelor weekend in Santa Fe. My wife's got her sister in Florida, so I escaped to Santa Fe, New Mexico. Not that I don't adore my sister-in-law, hang out with my cousin, and the acoustics here and the mic are not the same as I have back in Florida. All right, so when I go into wealth charts, typically I open up this chart here, but because it's a weekend, let's go into the weekly timing model. If you watched it before, you know that I have two things that have to occur for me to say I'm in a buy signal. One, price has to close above the 30-week WMA, and I need my weekly bongo to be green. As you can see, there's a green arrow pointing up on the spiders, the Qs, and the diamonds, meaning all three of them have met my buy criteria. Interestingly, the Russell is a big laggard. You could see here in the chart. We're going to look at the charts deeper, so don't worry if you don't see it very well. But not only is it below the moving average, but the bongo is red. How does this compare to last week? We picked up two new green arrows. The NASDAQ has been positive. The spider last week, I gave the neutral sign because it just didn't have a bongo yet. It had closed a little bit above the MA, but we're sitting good right now. So then I look at hot stocks, which I set to my market ETFs, bunch of different sector ETFs, and just asking the question, is there anything starting to move? Notice they don't have to have high strength wealth scores here. They just have the flame, which tells me they started moving. So gasoline, well, that's interesting. That might tell me to look at refiners, Valero for one. The spider, wow, spider move with a flame. You don't see that every day. Discretionary, cloud, which would be software, breakouts, oh, that's interesting, bonds, and then we continue to go down lower. So there is strength in this market. Then I'll go look at the indices and let's look at the week on the 5 minutes. Give me a second just to get my bearings. 28. Yep. So Monday, we saw it gap up, traded down, really didn't do much on the day and actually closed up but off the highs. Tuesday, the market continued its sell-off. And then Wednesday, big gap up, Thursday, a gap up, and Friday, another gap up, and the market just pushed higher into the end of the week. So, soft start and a strong finish on the week. If we look at the spiders, you could see, wow, a lot of things on this chart. So, let's look at them. Spiders broke out above this recent trend line here, and notice it had the flag, the high here in March, spike up here March 22nd. So we broke above that line. That's great. We're above the 50 and the 200. That's great. My EMS signal, which is an early firing signal, fired here. And notice that the wealth signal came in on Friday. Big up candle. That is a power move. And notice that the MACD on the S&P 500 has turned positive. I look at this as a very strong looking chart and bullish. And do we go back and at least retest the February highs? That's what my target is. To the downside, I got lots of support. I've got this line right here, which is pretty much where we were at the close on Wednesday, but it's also a couple spots we tagged before, which is just above the 50. I've got trend line support. I've got the 200. I feel pretty good right now about the spider. Of course, things could change overnight, especially if something blows up in Ukraine. The Qs took out the February highs. The Qs have certainly been the strength of the market, also above the 50 and the 200. Like what I see there as well. If we look at what happened on the diamonds, diamonds are still in this box, but they've now taken out their 50 and 200. Two time frame bongos are green. Gotta like that as well. Hard for me to be bearish right now looking at this. When I look at the Russell, this is the weak sister pulled down to what was the low in December and is bounced. Now, what I don't like about the Russell is not what it did on the weekend, on Friday rather, but it's still below the 200 and the 50. So where the others have those as potential support, those have to be considered potential resistance on the Russell. Market strong, you expect volatility have come down. Let's just take a look at volatility here, and you can see volatility is really doing nothing. And maybe this is where my old friend George Lee, may rest in peace, would say, when the VIX is high, it's time to buy. But when the VIX is low, look out below. Other people say to me, Jeff, don't look at the VIX, it's broken. I don't know if I buy that. The dollar, you could see, is way off of its highs. In fact, still below my line in the sand. At some point, maybe the dollar is going to rally, but the dollar really failed here in the March rally here. And a weak dollar, certainly in my opinion, supports further rally in the market and especially in commodities. I just hook up here. You'll notice that I don't typically use the Tasty Trade tickers on my charting, and there's a reason for that. If I'm putting the bongos and the other things, they need more bars than the Tasty Trade gives me. So it's easier just to use the built-in symbols within well charts. So gold didn't do much on Friday, was down 0.5%, but a major move with the weak dollar. Silver, which had been lagging, as you see, has caught up from the dollar. You can see oil has moved right up into the 50s, so a nice recovery in oil. And natural gas, not even worth talking about. And you can see the 10-year is bouncing here on the 200. This has been strong support before, but a weak 10-year and a weak dollar usually means a higher market. Now, I started looking at these breadth charts a few weeks ago when we were concerned about things like the large caps leading the indexes. And you could see both the RSP versus spiders. We saw some strength in the broader, pulling up the ratio chart. So the RSP outperforming short term. And here the QQQE outperforming the Qs with that little on the last few days. That's good to see. The other thing that's interesting is you're starting to see a slowdown in this rapid ascent of the Qs versus the Russell. The Qs are clearly outperforming. The Russell's the laggard, but boy, wouldn't it be nice to see the laggard start running? And I don't see the 50 doing much here versus Fangs, but I'll look at 50 if I remember. The 50 is starting to turn around. And if FFTY, which is small cap growth, start to go up, those are the traditional IBD 50 Market Smith stocks. And I know a lot of people trade those. The hourly S&P 500 sectors, these are ratio charts um, that I set up. And I just like to glance at them during the day. And I'm looking for a couple of things. The big leader in the market is going to be sitting up in the upper right-hand corner. Well, we can tell that the leader remains the same, which is money bag here, which is technology. That has not changed. Last week, it looked like communications was going to follow it. It weakened some, but frankly, communications is probably the second strongest group right now. I like to look here, discretionary is holding up, surprising. I'd really like to see industrials and banks and energy doing better. Right now, they look weak. Staples, which had pulled up some when the market was at more risk, weakened, as did utilities. I'm not big surprise, and healthcare is kind of weak. So we're kind of back in that communications and technology and discretionary leading, but this is relative strength to the S&P. It's not their individual performance. The S&P is going to be an average. Everything can be up, and you could be outperforming or underperforming the S&P. So it was a strong week. All the sectors were up, but the leaders remain technology, communications, and discretionary. So let's go into my bull scanners. And before I even go and I talk about the heat map, let's just look at the IBD 50 ETF. And notice I'm using the one that says New York Stock Exchange, not the Tasty Trade. And is it time to get excited here? No. Look at the weekly. How bad in this bear market that we may be coming out of soon have these stocks performed? I mean, you're looking at a high here in the 52.5 range. You're looking at lows in the 21. So more than a 50% haircut on the IBD 50. It's at best going sideways here. But notice it took out the 50, had a breakout and momentum bar, not doing much on relative strength. So we'll see, but it's off its lows. If you look at ARKK, a little bit nicer. Took out the 200 here, coming out of a squeeze, relative strength, maybe showing something. But look at Kathy Wood's performance. Not very good, huh? Getting up here in the 127s, but it's off its lows. 29 to 40 is 30% move, more than a 30% move. Okay, here's Friday, strong day, 90%, 98%, whatever the number was, the stock's positive. Not a lot of negative. Some short sellers seem to be attacking Micron, and you still had some weakness in some of the financials. If we look at sector scanner, yeah, it shows a negative on communication services. I know that in the S&P 500 sectors that was positive. One of the things, and the 1500 it was positive. But within wealth charts, I have a much broader group of stocks, and you could see using that group, it was actually a little bit negative. Healthcare actually leading, which is interesting. Let's see, actually technology leading, followed by healthcare. If you look on the week, you could see industrials had a big week, healthcare, basic materials. Now, these are going to be different than what you might see in other programs, and it's because look at the number of stocks. One of the things about industrials to be careful with, 1,000 of them, although it was only 1% return, are shell companies, and that's something that I don't trade a lot of the SPACs. Wealth Scanner. This is what I really do now to get a sense of what's moving. And again, as I've been talking about, and I talked about on the stocks and docs and last week, it's been very narrow technology driven. So the top down indices, I'm thinking I might revamp that because I've got some new sources, are a series of ETFs that represent industry groups, sectors, market indexes, and it gives me a sense of what might be leading at a given time. There's a bunch in there, and it should be coming up. All right, let's wonder if the servers. We're doing an update, but we're good right now. So let's see what we find here. So I'm going to show you a couple of things that are important to me. Score. The higher, the better. In a bad market, the leading ETFs on a bullish score could be 4s and 500s. That's not a very good score. In a strong market, I'm going to see things above 800. I don't want to look usually at things below 700, 750. So what we see here is a number of things that are above 750. The arrow tells me they're heading up. And if I see the flame, they had a pretty big recent move. We started with the flame in the beginning here today. Notice the Qs, the triple Q is leading 820, financial composite 810, silver, I showed you how strong it was, 800, spider growth, here's technology, here's Dow Jones Internet, the Qs, communications, the FANG, the semis. Do we have any doubt what's leading this market? Now, again, clearly the sense I have is the markets have gotten a little bit more broad, and it's less 5 or 6 people leading it. The Microsoft, the Apple, the Nvidia, um, Netflix has been doing well. Google all of a sudden is doing well, even Amazon. And you could see the triple Q, which probably has all of those in them, and then is leveraged 3x, has broken out here to recent highs. It is way off of its lows. This is something that, gosh, if we pull it all the way down, actually, let me just expand it. If we look at the triple Qs, maybe it's not going to let me do that. Let's look at monthly on the triple Qs. You could see the triple Qs got as high as 91.40. And I bet that's the last week at the end of 2020. That was 2021 on the monthly chart. Okay. So obviously well off the highs, kind of looks kind of like that pattern I always show you. Maybe it's about or has entered a stage 2 Weinstein. But the bottom line is it looks like it's breaking out. I've been trading triple Qs or really owning them of late instead of playing the name game. You could see they've broken out relative strength, but you could also see their high jump at 95. Short term, they're probably getting overbought. I am expecting the markets to pause to refresh before they go higher. That doesn't mean that the short squeeze doesn't continue and my pause happens later. So technology is where the money is. My CAT scanner, I'm going to look at my combo leaders. There's a lot of technology in it. This is a list of technically and, well, at least fundamentally strong that made it to one of my bullish fundamental or technical watch lists. I typically only have stocks $5 or more, and I like a minimum of 500,000 shares on average trading volume. I like to look at stocks that frankly look like let's look at Axon. This is a leader. This is one of the true market leaders right now. What bear market? This used to be the old taser. And what I like is I don't like buying extended stocks up here. I like them to pull back. And I can scan for that by looking for stocks where the weekly bongo, which is where my little plus is green in an uptrend. I have a short-term pullback, the daily goes to red, and then I want to get interested when it starts to go up again or the daily goes green. So I have set my scanner here to look for my 5 and 500,000 shares, at least one bullish dot. Why? Because stocks and chop go sideways. Stocks that are starting to go up, especially early on in a move are going to start having dots. And some of the ones that are really ready to move are going to have a lot of my dots. My dots represent gaps, volume, breakouts, and momentum. I don't want any bearish dots because if I got bullish and bearish dots, I'm kind of defining chop right off the bat. I want to have a reasonable time frame where it flipped at pullbacks. I'll give it 9 days. And I want my current daily and weekly bongos to be bullish. I then rank the stocks by dots and watch how the stocks that I like to trade come to the top. Pacific Biosciences. When I think of them, I think of a company that's involved in genomic testing and developing of test kits and ways of looking for mutations or things that if you have cancer, help guide us, the oncologist, in treating you. So the stock, much higher pullback with healthcare. For whatever reason, this is a sector with stocks like Illumina, Bruker Biosciences, some of the genomic testing companies, all been beaten up because they've lost the COVID testing. But they're starting to move. And if you look at this one, this is, maybe it's a bear wedge, it's going lower, but it's one that I think is interesting. The daily's gone sideways, a break above the 50 with 4 dots. And I pay attention to a couple things on this chart. One, 4 dots, a gap up, massive volume, broke out of recent chop, and it's got positive momentum. The yellow going to the green, it came out of its squeeze. So, buying a stock in a squeeze is not, I like to find them in a squeeze and buy them when they come out. The green dot tells me the first day it came out. We'll look at it for up to 3 green dots if I could scan for 3 days after it comes out of the squeeze. Notice the relative strength and the on-balance volume are going straight up. That is a very bullish sign. And I like Pacific Bioscience. The next one on the list is Axon. And what does Axon tell me? Axon's a big move up, had a recent pullback. There's my red bongos. And now it's breaking out again. Don't see much yet on the relative strength, but this stock has been a beast. And you want to buy beasts. I like to buy beasts on pullbacks. And when they start to run again, I think that one looks interesting. Don't know this one. Don't like the chart pattern. Something happened with this on Friday, a major day. Not my kind of stock. Ceridian, another technology play. I believe it's an application software. Uptrend, pullback, breakout. Weekly bongo, green. Daily bongo went to red into green. It has volume, breakout, and momentum, taking out the 50. I like relative strength in OBV. This is how I find my winning stocks. CGNX. Maybe good. I'd pass on this one. Why? Don't see much relative strength, and it's below the 50-day moving average. Checkpoint, one of the structure software involved in threat defense. Sideways, kind of sideways choppy, so probably not one I want to go chasing. No relative strength. DHI. I have a hard time explaining this because all I hear on TV, rates are high, new mortgages are down, housing prices are in trouble. Yet I live in Florida and they're still going higher. And let's look at DH Horton. Boom, breakout on massive volume. 3 strong volume days. Momentum and breakout from a squeeze, good relative strength in OBV. I am playing home builders. And if you look at XHB, which I think is home builder ETF, you could see a nice pullback from an uptrend and a breakout of the 50. I was playing nail, and maybe that wasn't the best thing to play, but I think it is going to start moving now. Look at the breakout in nail. So you don't have to play an individual name. I could tell you Toll Brothers, Pulte, both look good. Then you've got things like Tri Point and some of these Meritage and smaller home builders. The charts look good. I like playing nail because it's going to capture Home Depot and Lowe's as well. DLOD local, don't know anything about them. Um, again, 3 big volume days. I got plenty of things I do know, so I'm going to keep moving. Endeavor Group Holdings, kind of loosey, not very tight, but breakout, pullback, 3 dots, not much relative strength. Exact Sciences, this is another in the molecular testing. They have testing for colon cancer. They bought Genomic Health a few years ago. Again, run up, sideways move. Are they getting ready to run again? Maybe. I don't see enough relative strength, so I'm not going after it. Just looking at the list, MongoDB, I like this one. Notice the breakout of the 200 here, 3 dots, relative strength, OBV, Palo Alto Networks, a true market leader, sideways move and breaking out. Those that watched my video on Friday, I talked about DigitalOcean. That was a pretty good one. And why was I talking about DigitalOcean? Because I saw this, and I said, "Look at this. Here's a stock beat up against that 200 for the last month and a half, broke above the 200 on Thursday with breakout momentum, relative strength showing." And I thought that one looked interesting. And then lo and behold, look what happened on Friday. Now, a lot of times I'll give you something and it'll gap up and it's not buyable. I'll show you something that I'm looking at. But this was a trade I took, and the nice thing about this trade is it opened, traded down, and then traded higher the rest of the session. You had a chance to get this at a reasonable price. Another one that obviously is widely held is Tesla. I like everything here except the 200-day moving average right overhead. Do I think this can run up to 215? Absolutely. Is the market going to go the way Tesla goes? Yes, it will. But will we get above that 200? We've really failed that 200, even though we nibbled a bit above it in August. That is a critical mark there. And notice the last couple of times we got up, we turned down. I think I read somewhere that automakers are going to come out with some Q1 sales and that Tesla might release over the weekend. That obviously will be um, a leading effort. They've cut price a couple of times of late. We'll see if that stimulated some buying. So isn't that easy? I mean, to be honest, I've looked at over 1,000 charts this weekend already. And then I can just run my scanner and a lot of the same stocks show up there. In fact, most of the leading stocks. Now, a couple other things that I like to do is I've built a list of high relative strength stocks. I update this every week. These are the market leaders, and I just curious, are any of them giving me a buy signal, meaning my criteria? Axon, CDAY, PANW. Just look at Array Technology. This is a semiconductor stock, and their semiconductors are used in the solar industry. This had a big run earlier in the year. It's come back. I think this one might be getting ready to break out. Look at relative strength and volume. So that's one I'll be watching. In addition, ELF, this is a true market leader. But notice what could have happened. You didn't have to wait until Monday to buy it. You had the signal here coming out of the squeeze. But you can go back. Here was a 4 dot move right here, which began this big move up. Look at the findings. This is what I buy. I want volume. So the 4 dots. I don't always need 4 dots, but that had a gap, volume, breakout momentum. But looking at that relative strength in OBV, I get excited when I see that pattern. OKTA, another technology company, I think a software company, looks like it's breaking out as well. There is a lot to like about this market. Still seeing mostly technology stocks and leading stocks. So have an awesome week. I will be back with you on stocksanddocs.com. And for the you folks that just liked it on YouTube, I'll see you next weekend.